All right, today we're diving into a massive shift in global power. And look, it's not about weapons or the latest tech. It's about something far more fundamental. Who controls the food we all eat? This is a story about capital, calories, and ultimately control. And it's revealing a whole new playbook for how nations are trying to survive.
So what's more powerful than money? I mean, it's a great question, isn't it? In a world that runs on finance, you'd think nothing could top cold, hard cash. But there's something else. And the answer? Well, it's pretty much what this whole explainer is about. It's controlling the one thing that money can't always buy: food. Think about it. In a real crisis, like a massive drought or war, having a mountain of cash doesn't mean a thing if the grocery store shelves are empty. The real power, the ultimate power, isn't just having the money to buy food. It's owning the entire system that grows it, stores it, and ships it.
So what we're seeing isn't just another big business deal. No, this is a sign that the entire global food system is literally being rewired right before our eyes. A totally new strategy for how countries secure their food is starting to emerge.
And to really get a handle on this shift, we're going to dive deep into one specific massive deal. It's the perfect case study because it shows exactly how this new thinking works in the real world. This is where a country's grand strategy meets the dirt, the silos, and the ships of global agriculture.
Okay, so let's meet the players in this deal. On one side, you have Olam Agri. These guys are a global powerhouse in agriculture with infrastructure. We're talking farms, mills, ports, the whole shebang in over 30 countries. Then on the other side, you've got SALIC. And listen, SALIC isn't just some random investment fund. It's the state-owned, state-backed food security investor for Saudi Arabia. Their one job, their core mission, is to make sure the nation has enough food.
And the numbers here, wow, they're just staggering. The total value of Olam Agri in this whole transaction was a cool $3.5 billion. This isn't a small-time purchase. We are talking about a deal on a truly massive global scale.
So, to get a controlling interest, SALIC put down nearly $1.8 billion. Now that's important. This isn't just buying a few shares for a dividend. This is about taking operational control, about being the one to steer the ship. Which brings us to the big question, right? Why on earth would you spend that much money?
Well, this brings us right to the heart of it, the strategic motive. This wasn't just about getting a good return on investment. No, this was a strategic play to turn billions of dollars directly into calories, into actual food security.
And the concept driving all of this is something called food security. Now, the definition sounds simple enough, right? It's just having reliable access to enough affordable, nutritious food. But actually achieving that in the 21st century, well, that's getting incredibly complicated, especially for some countries. And if you want to understand the urgency, just look at the pressure Saudi Arabia is facing. I mean, first off, it's a water-scarce country. It's a desert. Large-scale farming is basically impossible. Then you throw in the increasing volatility from climate change and how easily global supply chains can get disrupted. Suddenly, just hoping to buy food on the open market starts to look like a really, really risky gamble.
So what did all that money actually buy?
It wasn't just a bunch of sacks of grain. No way. It bought the entire chain. They now have a controlling interest in the farms where the food is grown, the giant silos where it's stored, the processing plants that turn it into products, and even the logistics corridors, the pads that get it to the export terminals. This is about total, end-to-end control, from the farm field all the way to the port. You see, this deal is way bigger than just one transaction. It's a signal. It's a sign of a fundamental pivot, a complete shift away from how countries have traditionally tried to secure their food for decades. So let's compare the two models. The old way was basically just trading. You'd play the volatile spot markets, buying and selling commodities, trying to make a short-term profit. Super unpredictable. This new model, the ownership model, is the complete opposite. The focus is on owning the actual physical infrastructure. The goal isn't to make a quick buck. It's to guarantee a stable, long-term supply. You're trading those crazy, unpredictable profit margins for the steady, controlled flow that comes from owning the whole pipeline. Okay, so what does all this mean for the rest of the world? I mean, what happens when this new kind of investor, a sovereign state, starts playing the game? Especially for the countries where all these assets, all these farms and silos are actually located.
Well, let's think about the two types of capital. You have your short-term financial investor, right? They're usually looking for quick returns, a rapid exit. They're not super excited about funding a giant concrete silo that might take 30 years to pay for itself. But a long-term sovereign investor like SALIC, they have a mandate that spans decades. Their main goal, food security, lines up perfectly with making those huge long-term investments in essential infrastructure that often get ignored.
And this actually creates some pretty significant potential benefits for the emerging markets where these assets are. We're talking about a massive, long-term injection of cash right into their food systems. This is money for things like modern inland silos or new mills, stuff that can cut down on food waste. It can even improve the host nation's own food security, all while stabilizing their ability to export their products. It can be a win-win.
So let's pull all these threads together. The most important thing to get is that this isn't some isolated one-off deal. It's a template. This is the new playbook for how nations with a lot of capital can secure their future in what's becoming a very uncertain world.
And this quote from the source material just hits the nail on the head. Food is increasingly treated as strategic infrastructure, on par with energy or minerals. Think about that. We've always understood that things like oil fields or mineral deposits are strategic national assets. What's changing is that now farms, grain silos, and shipping routes are being put in that exact same category. All right, so let's boil it all down to the key takeaways. First, sovereign funds are now buying up entire physical food supply chains, not just trading paper contracts. Second, this whole strategy is basically a giant hedge against the risks of climate change and geopolitical shocks. Third, it's a massive shift away from trading commodities to owning the hard infrastructure. And finally, this is creating a brand new kind of relationship between the capital-rich nations that need food and the asset-rich nations that can grow it. And all of this leaves us with one final and really important question to think about. As this new global food map gets redrawn with these direct lines between capital-rich buyers and asset-rich producers, what happens to everyone else? What does this new world order mean for all the countries that are left outside of these powerful new supply chains?